This is Chris from FX Coins taking a look at both Bitcoin and Ethereum in this video. Recently, we've seen a lot of noise out there when it comes to the cryptocurrency markets, especially around Bitcoin and Ethereum. More so Bitcoin, because I think that is the one most people pay attention to. Bitcoin has been seeing people post that the manipulation is too much over the last 6 weeks. It's only been 6 weeks since we peaked, and I think you're starting to see a lot of people with leverage really get hammered. And that is interesting to me because this is no longer the old Bitcoin. And that's the part that everybody keeps forgetting. So when you see a Satoshi era whale dump 11,000 Bitcoin that he originally bought at about $1 a piece for $1.3 billion gain, people start to have conspiracy theories, especially when you have Coinbase dumping as well as BlackRock. The reality is Coinbase and BlackRock both represent clients. That isn't so much them speculating as it is people going in and out of the IBIT ETF. If they sell, there comes a point where they have to sell the spot Bitcoin, just as if investors come in and start buying, they have to buy it. So there is a lot of misinformation out there. And really, as a retail trader, instead of trying to figure out why CoinDesk is selling because they have to, or why BlackRock is selling because their clients want them to, or why somebody who's made $1.3 billion with a $10,000 investment is selling because he obviously has a brain. The only thing you can do instead of participating in all of this online nonsense is pay attention to the charts. The Bitcoin market has tried to break above the $108,000 level and failed miserably during the trading session on Tuesday. The 200-day EMA sits there, and of course we have the $100,000 level underneath. The $100,000 level has a lot of psychology attached to it, but even if we were to break down below there on a daily close, it's not the end of the world. We're looking at probably $94,000 being targeted, maybe $92,000. And then $85,000. This is a market that even if we were to pull back to right around the $92,000 level, for example, if you zoom out on the chart, it just looks like a normal market. So the point is, don't get overly emotional. I suspect a lot of what you're seeing online are people who are highly levered. If we can take out the November 2nd or November 3rd candlestick, which is right around the $111,000 level, then I become a little bit more interested in getting long. Ethereum, of course, is dancing around the 200-day EMA at the same time, showing signs of hesitation, but Ethereum generally takes its cues from Bitcoin. If we were to drop from here, the $3,000 level is the most obvious support level. But if we rally from here, then you have to look at the 50-day EMA, which is basically right at the top of the November 3rd candlestick when the latest selling fell apart and fell upon the market. If we can take out the top of that candlestick, I think Ethereum's got a real shot at going back towards the highs. Right now, though, I think the best case scenario is that we stabilize. That's really what these markets need.